What's up, guys? I already see Auken in the chat trolling. You like making fun of the handicap? I guess now that Trump won, this is allowed again. But yes, thank you. Please put your questions in caps so I can hear it. As you know, I'm not hearing properly, and also the chat is on the right side of my screen, and it's my right side of my ear that is hindered. So definitely keep that caps lock going if you want me to even understand what you're saying. Hello, Yelena. How are you? Good to see you. And let's dive into things. All right. So, very weird for me to talk with hearing 30% on one side and nothing or everything on the other. But we'll get into it. Thank you for the support. Appreciate it. Bitcoin, Bitcoin. Well, first, let's take a moment to zoom out and appreciate this, guys. I will get into this later on. Why are you wearing two earbuds? That's a good question. Oh my God, that's funny. All right, but first let's zoom out, guys, and look at that. That's beautiful, isn't it? Absolutely beautiful, man. New all-time highs. It's funny as well that we we have we have reached it. I think what I think is very cool to see is, and I mean this in the best way possible, is the lack of euphoria in the chat of Minoma. Last time we hit all-time highs 4 years ago, I was in a different group, and everyone was losing their freaking minds of hitting all-time highs. I feel like in our group, everyone is pretty rational about it, which I think is a good sign because that means we're thinking with our heads instead of getting lost with euphoria. It's vastly different than last cycle, what I experienced, where everyone was completely freaking out. But maybe we'll still get there. Maybe 75K or 76K is not high enough yet for us, and we'll get there when we reach 100K. Who knows? But beautiful to see. Expected as well. Well, I have to be honest. I expected the Trump win to be bullish for the markets. I think also that's why we've had this uptrend here because um, the market was pricing in a win of Donald Trump, which became more likely over time. And no matter how you feel about the guy, the markets react positively to it and feel good about it because most investors agree that Trump's economical policies would be better for the markets. Probably inflation will rise in the period to come as well, a little bit, because that's what happens when you stimulate an economy. And that's obviously good for risk assets, and it will increase spending. But that's also what we're seeing with the Fed now. So everything is just kind of coming together nicely. And now we've had that election result, and we immediately got that pump. I mean, that aggressive a pump I would not have expected. I kind of expected maybe more a little bit of a fake out, but here we are. Markets are reacting very well to the news, and I do think that we are entering a phase now where, let me put it like this: I wouldn't be shorting at this point in time. I do think we're gonna head into a phase again where it's similar to here, where we just had this massive uptrend. Where did we have that period again where we just had a beautiful piece of market structure that just kept on retesting its highs for forever? Which period? It must have been this period. Must have been this period. Was there? I don't want to zoom. Oh, I'm on the daily chart. It was on a 50-minute chart. I don't want to zoom out that much. But anyway, what we're seeing right now is this beautiful mark structure, and everything is kind of aligning for further upside, right? So I personally wouldn't be shorting. And then you also see, besides all the enormous bullishness that we're experiencing right now, is how would I put this? I don't know if I would take this as the high, to be honest, but let me just do it. What you see right now is this beautifully bullish uptrend, and I'm going to get in statistics later, where you put in a high here and you retest it there, and this, if you keep on seeing this, like this is usually a very 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 strong sign. So at least as long as this keeps happening, I think we're good here, small deviation. I don't really would consider this a very good market structure high in this case. I think I like this one, and then I mean either one of those. But regardless, I'm saying this because I'm going to get to a point where I do think there's a nice setup to be had for long after testing this level over here. You could probably already guess kind of where I want to go with that. But long story short, the stars align, everything seems good for further upside. And I wouldn't want to beg my bets on shorting here. Also, very nice to see all these guys got stopped out, which was to be expected. I don't know if you guys remember, but a long time ago, somewhere in there, I made a post that all the people who were short from this area would not be taking profits until down here. I've said it on streams multiple times as well, and they will all get stopped out eventually. Like, it's inevitable. What I said was these guys are never going to reach their profits. They're going to get stopped out, all of them. And here we are, they're all stopped out. But I do think there is more room to go. So my general bias now is bullish. That's because of the fundamentals that are aligning. But it doesn't mean we have to go straight up. I wouldn't necessarily expect an enormous, just straight up line here. Maybe we could do something like this, range for a bit, and then later on go high again. But I do expect that in general sense, we'll see a lot of bullishness in the period to come. And I'm not saying that if Trump had not won, we would not have seen a bull market. I think we would have seen a bull market. But now that Trump won, I think we're going to see an even more aggressive bull market. And I just think it's going to be a really good year for all of us involved in crypto. So that's exciting. That's awesome. I personally, the only non-major altcoin I'm invested in, or maybe it's major right now, is Dogecoin, which is performing awesome. So that's also very nice to see. I have good expectations for Dogecoin. And I do expect Dogecoin to, rally a lot higher. I don't know if it can reach $1 meme, but I mean, this was such an obvious buy, right? I've been shilling Dogecoin. I remember here at the lows a while ago where I said just the RR on this thing was just insane. So I did buy some here. I sold here and I bought back here. So I did pretty well. And now I'm just going to ride this thing for longer. And the reason I bought this is my only altcoin is because of Elon Musk. I always say you never bet against Elon Musk. This guy gets a lot of hate in the centralized media, but whenever he sets his mind on something, in this case, he sets his mind on it in terms of a meme, right? And now he's going to become head of Department of Government Efficiency, Doge. I mean, when you see those things happening, man, like you don't bet against that. Elon Musk is a winner, and man, when he bets on something, and it's not that he's buying Doge, but he's definitely making it immortal meme, right? So, and besides that, like the TA was just great on it. Perfect risk to reward. Doesn't get any better than this, right? This long ass accumulation, because this was even, and I'm digressing a little bit, this was even when Bitcoin was already going up. That's why I said back then, and some of the guys will remember, here, look at this. Bitcoin was already mooning here. Look at that. Bitcoin was already, really high. And those were still in this range. Amazing, right? So you already had kind of this confirmation of a bull run going on here on Bitcoin, and Dogecoin was just sleeping. So, but that's all hindsight. I'm very happy to see this. I was looking at my portfolio yesterday, and I was like, whoa. Those remember me of the good old days. So that's Dogecoin. All right, so that's enough qualitative analysis, or maybe I'll do a little bit more qualitative analysis because it is a good time for it. I've also finally want to cut off with, you probably know my bull thesis as many different layers. One of the layers is market structure. The main layer, though, is the fundamentals. And by the way, when I talk about the elections have an effect, I know a lot of people say, oh, the news doesn't have any effect on the markets. I disagree. I do think the news has an effect on the market. I'm not saying you need the news to trade, but I just think it's ignorant to discard effect macroeconomical news will have and developments will have on the market. So I do think it's good to stay on top of what is happening, which is also why I personally read a lot about politics and economics, and I also find it interesting. But of course, the market's price stuff in. I think that's why you've seen like the market is very intelligent. So I think that's why we see start this run up starting here because markets were pricing in a Trump win. So there is a lot involved, but there's just a lot of fundamental factors that will affect the market in certain ways. So you do want to keep track of that. And yeah, I just personally don't believe that you don't have to track the news at all. I do think it's important to be aware of it. Not saying that we would not have had a bull run if Trump didn't win. I do think we would still have had a bull run, but I think now the magnitude of the bull run will increase. Weekly, oh no, wait, what am I doing? The weekly mark structure high. So my final one part of the thesis was the mark structure here, right? Where I was saying that it's a good, I'm just reviewing this for a while, for a bit before I go into it. Where I said this is the mark structure on the weekly. And what I said was that we have this perfect, yeah, no, this was, maybe I pulled it from here actually. I think I had this as the low, now that I think of it. Yeah, I have this as the low. So this was the mark structure. And what I said was that this just looks like a textbook retracement that is happening right now, right? You have an impulse phase, which is what we had here, the impulse phase, and then we had the retracement phase. And I have a post about this on Twitter as well that I made at the lows, by the way. At the lows, I said, okay, this is a retracement phase. I said here or something, I posted this is a retracement before continuation of the uptrend. But I said the weekly is up. This is the retracement phase because retracements of higher time frames happen on, well, on any time frame really, but retracements happen either by sharp pullbacks or prolonged sideways consolidations, which is what we had here, right? So we had a prolonged sideways consolidation, and now we are on for quite some another run. I do think that timing is very important. So you will see that highs and lows are kind of put in around the same periods. So if you, for example, check, I mean, you can do it on a very high time frame, and that it's great. Like the higher the time frame, the more accurate it is. I actually want to gather statistics on this and put it in the dashboard. But for example, if you look at from the low here, I'm not gonna look at all the previous ones because, as in you look at some data, I would say, or do this yourself and see how often it's kind of like more or less in the same range. This was 245 days of up, then followed by 210 days of mega up, right? So now the question is, and I'm always measuring this when I do this from the low to the high, the lowest point to the highest point. So this was the lowest point, and if we have like 200, say 30 bars again, that it seems that if this is indeed the start of, we found the lower and now we're looking for the high. And this is, by the way, assuming that the direction is up, because oftentimes if you have an uptrend, the upwards moves will be longer than the downwards moves or the retracement phases. In this case, I think it's not the case because I think this one was no, actually to the low it was less long, 21 bars against 30. It's quite a bit. So I would expect, this run up, and it doesn't mean we have to go only up, right? Like here, you can see it lasts a while, but I wouldn't be surprised to see it last until with some pauses. But like the first major high to be formed, I don't know, could be something like this, and then something like this, something like that. Maybe a little bit shorter. I wouldn't be surprised. But the gist of it that I do think we need quite some time to go up. And once again, I want to emphasize it doesn't mean this. It could even mean, this or something. Just that the general direction will be up, I think, for the coming months. We can do this on a lower time frame as well. This is also what I did last week, and it's why I said last week on the stream, if you remember, that I did not think this was going to be the high, because usually these uptrends take longer to form a high, so to say, to find that high. And I didn't think we had it yet. But I honestly don't know anymore how I drew that. But if I look at things now, if I just take it differently, let's see here, you will kind of see the same thing. So here, low to high, 112 bars, 18 days, low to high, 126 bars, 21 days, low to, I'll take this as the high, 113 bars, 18 days, right? So you kind of see it's like 112 bars, 126 bars, 113 bars. So you see that the timing is more or less similar. And I mean, the crazy is you have this on the higher time frame. This is also the reason why I think the end of the bull market will be more or less October 2025, or one of the reasons. I think timing is very important here. So if we extrapolate that, so say this is indeed the next leg up, which is possible. Then the question becomes, how long is that going to take? And then you could say, well, could also probably be around that 100 bar mark, and then this immediate leg up would be until like the third week of November or something. So I do think everything aligns, and some high prices seem likely, because also I do think what we're going to see now is the end of this range right here. There is room for caution though, or range. We're going to see market structure break there. There's room for caution because these kind of levels often give a reaction, and because it's such a high time frame level, this could play out over a longer period, right? So you could even spend 2 weeks above here, kind of deviate below it again, and then go up, right? It's possible. So this is a very high time frame level. So I wouldn't necessarily say myself that this is broken at this point in time. But everything is looking good. I wouldn't be shorting here myself. And I do think people are shorting here. And I do think they are gonna get wrecked. Shorting right now is just not a good idea when you see such a beautiful piece of market structure intact. It doesn't get a lot better than what you're seeing there with swing points, the ones I marked out. High, low. Well, let me not put it from here. Low, high, low, high, low, high, low, high, right? Beautiful. So I wouldn't know why you would want to trade against that. Regarding the timing, I actually do plan. Let me just check this. Nope. I always check my phone nowadays to see if Auke is telling me that my sound is off, and then I'm talking to myself because it seems like it is not. But I wouldn't personally short against that, and I think it's a losing strategy. So no shorts for me. That much clear. I mean, you can even look at simple things like EMA. At some point, something like this will happen again. So I do think we might be entering such a stage again. So with all that said, now let's look. Okay, what's interesting? So here we have that EMA zone right there, which I think is going to be interesting because it's going to bring us to the next thing, which is you probably guessed it, fair value gaps. So that's the first thing I want to discuss, fair value gaps. What I want to discuss specifically is that feature and pretty much how to use it. Because this is why I've been said when I released it that it will not be the final version. Now I gotta see how I'm going to use it, and then I'll improve it based on that. And I do see more and more how I want to use it and how I think it's going to be very valuable for everyone to use. Uh, so I made some improvements, but I still need to make some big improvements where I think the use case will really become evident to everyone, because I think right now it's still a little bit difficult for some, or it's not very easy interpretable, right? It's not like with the summary page that you go there and it's like, okay, I understand what's going on here. So I want to fix that. But we have this fair value gap here, and there was no naked daily point of controls. So we have that fair value gap here. We have this market structure point right there, right? So this part's important, and then we have that 4-hour EMA somewhere down here. So you've already seen my analysis on the fair value gap, but I'm just going to do it again and kind of explain what I'm doing, because I want you guys to understand how to use it, or at least see a little bit the thought process that goes behind what I'm doing. Let me first maybe check a little bit the biases for today, but ETH, exhausted pool. ETH is, I'll have some things to say about ETH as well, because I see a lot of people getting hyped about ETH, but I think it's too soon, my personal opinion. And I'm saying that as an ETH holder. So we have some bullish signals on the 4 hour. Yeah, I just personally, I wouldn't short. I just wouldn't short at all at this point. Like, I really would not short, period. I would rather miss. So say then, people are like, yeah, but what if you're going to miss this trade? I would rather, like, if I would be trading, because I don't have any time to trade with building Minoma, I'm so busy. But if I would be trading, I would rather miss this short and look for the long here if all the signs are full mega bull, right? So that's just my opinion. So I wouldn't be paying attention to any short signals, but right now we have long signals, so that's something you could pay attention to. But the first thing I want to look at the fair value gap. What I've noticed is that you can use these statistics to either determine resistance. So that's what we did last week. We'll go over that specific example where you can, determine. Say you're targeting. Well, I'll get to that later. You can determine resistance, and you can also determine support, right? So you have both magnifying effect, and also you can determine, okay, how likely is this support to hold? And I think it's also very good because it will make you understand kind of how the market moves. For example, we had now this 5%, 5.4% fair value gap, right? So 5.4% big, which is really big. What I cannot do in the online version yet, but what I can do in the offline version, what I did is filter on size. Or did I actually add it? Let me check if I added it. Ah, no, too bad. I didn't add it as a filter. Why did I not add it as a filter? I will add it as a filter. So what I can do on the other version, but I will add it as a filter. Basically, what you will see, and let me just grab the statistics on the next day. I mean, let's just grab all fair value gaps. So this is all fair value gaps, right? All fair value gaps combined. What I could do now is say, okay, what are the odds of us like filling or tapping this thing before the end of the week, right? So the end of the week is 11th of November. What I can do here is basically select the end of the week, 11 November, 8 p.m. / 4 hour candle. I'm thinking about doing this different, making this a date selector maybe. But so that's 4 days from the creation of the fair value gap, right? Basically, what we can read here now, so that then automatically here on the right populates. Okay, so I have here, I select at the end of the week. What it basically does here on the right, it calculates how much difference there is between the creation of the fair value gap and the end of the week, which is 4 days. Let me just, so here is the confirmation, 1, 2, 3, 4 days. See, 4 bars. So that's basically what it's just doing in the background. First, you had to manually select 4 candles or something. I figured this would be easier. Does so on all time frames, by the way, in this way. So now we can see, okay, let's see. After 4 days, so this thing is unmitigated. We didn't have a tap. After 4 days, 62.1% of these fair value gaps will have had a first tap. So it is slightly more likely that before of the end of the week, we'll have a tap of this fair value gap. All right, so that's something we already know now, where you can say that if you would long here, you would go against. It makes sense to not go mega long at this point, but if you would long here, you would go against probabilities slightly, right? Not a lot, because before the end of the week, you would have 60% of these fair value gaps would have a first tap. So something like this is actually more likely at the moment, right? Until the end of the week. So a slight retracement. Again, doesn't mean I would short. Personally, that's not bad because I think just the probabilities are more skewed towards upside. But you also want to be careful with longs. It makes maybe more sense to go to the wait for a retracement. So then we can do the same, and then we say, okay, 43% of fair value gaps are filled before the end of the week. And this is where, and let me just grab. This is where the filtering of the fair value gaps comes into play. I'm just going to grab that. My post here. So if I filter it for fair value gaps bigger than 4%, right? which is a feature I will add for everyone. But then I can see that after 4 days, only 18%. So here's an interesting point, right? What you can see is that this is 62.1% against 59%. So what we can conclude from that is that there's basically no difference in how fast the first step of the fair value gap usually occurs compared to big fair value gaps or small fair value gaps. No matter how big it is, it will be tapped more or less after the same amount of time. However, there's a big difference in how fast they get filled. So fair value gaps that are 4% or bigger will get filled after 4 days 18% of the time, right? 18% of the time versus 43% of the time for all fair value gaps. Obviously, this also makes sense because there is more time for it. There's more time needed for this one to go down, but it also simply shows that a very drastic reversal after a move like this is very rare. Before the end of the week, to have this filled is an 18% occurrence. So more or less 1 in 5 times we put in a fair value gap like this, we will see a drastic reversal and fill this thing. So, shorting this towards here is a very, very, very bad idea because you're pretty much counting on a less than 20% probability of that happening. Then we see reversed. So reverse is a new one that I added because we'll get to that as I'm going to explain last week's fair value gap setup. Because I have also found this is very useful to use to determine resistances. So in this case, the reversal would happen if we close below this level, below the low right here. And what that basically tells us is, that, that's pretty obvious though in this case, I'm not going to lie, because closing below here before the end of the week, that would be a really drastic move. But in any case, we have hard data to back it now. But, we could do the same thing and we can say, okay, well, what about, the end of next week? So the end of 24th of November. Well, let me just go to this one again. And this one is where it gets interesting. All right, so it's not even 24th, it's the end of 18th of November because oh no, so it is the end of next week. Yeah, so the end of next week here, 18th of November, they do that well. What are the odds there? Well, even then, so by the end of next week, there is only 25% of these will have had a full fill. So the end of next week is here. The close is here. So for this to happen, so to tap this level is 25% probability. 25%, 1 in 4. So obviously, once again, you're not going to be looking for shorts here in order to target that low. It's a very... how am I going to say it? It's not a good idea. It's against the probabilities, right? So we don't want to do it. So all this data is pretty much supporting that, okay, there is evidently this kind of move is simply very bullish, right? It's very bullish. It is likely we will fill some of it, right? It's likely we will fill some of it because oftentimes you do fill them. And that is what you see in this data right here, right? That you have that 70% filled after 11 days. So by the end of next week, we have a 70% chance of at least having tapped this thing. And then the tap could be anywhere from here to here. I will probably gather some statistics in the future where I will measure how big the tap was, like how in terms of percentages, did we reach 50%? Did we reach, 75%, 25%? That will come in the future. But another really important thing I want you to take away is from that graph on the bottom left. So we've seen that for this, and look at the difference. So this is normal. This is all fair value gaps. You can see that the first steps and the reversals are kind of, they're not far apart, indicating that not very, there's definitely a difference. Basically, so again, let me actually just explain this. So this, what we're looking at is on the axis right here is the number of candles after the fair value gap got confirmed. And what you basically see here in the line is the percentage of fair value gaps that have either had a first step, the top line, a full fill, orange line, or reversal, which is the dark blue line or greenish line, by a number of candles. So here what you can say after 20 candles, in this case 20 days, 50% of fair value gaps will have had a reversal, whereas 75% will have had a first step. So what does that mean? That kind of means that there's 25%, which is in between first step and reversal. You can see that that's kind of the difference that you can, how do you say it, derive a reaction from that. So because it means that since it takes a lot longer for the first step or for a reversal to happen compared to the first step, that means that very often there is at least a reaction from the first step. So that can be, with a reaction, I mean, that could be either this or it could be something like this. And we can use the second chart for that as well to see which one it is. But what we can see with fair value gaps of 4% or more, look at that. The difference is a lot higher between these three different lines, right? So here you have this one, right? So it's kind of like nice all curving up together. There's definitely a difference, but then there's, boom, that massive difference, right? Massive, 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 massive difference. So what that means is that fair value gaps this big often have a first step, and after the first step, it takes a lot longer to have a full fill or a reversal, which indicates there is a much higher probability on having a reaction from a big fair value gap than there is from and with a reaction, I mean, going back up in this case, and then there is compared to normal fair value gaps when I say when you're not filtering fair value gaps. So there's a difference. Then the chart here on the right also becomes interesting because what we can derive from it is the following. So this is kind of the same, but it's, wow, this post is doing well, 42 likes. Hit the like button, guys. Hit the like button. Anyway, what I'm seeing here is that here, let me first explain what this is. So this is how many fair value gaps are filled after a certain percentage move away from that fair value gap. So the move away, I changed this a little bit. I have already alluded to it, is now measured from here. So this is now a 0.6% move away. Do I have that? It's probably not updated yet. Oh, no, wait, I might actually, I might count that from here. Right, either it's from here or here. It's counted as in how far did we go until moving. I had it first at counted from here, but I just noticed there was a lot of variability within the data with the confirmation candle. So what I kind of decided to do was to say, okay, I'm just gonna measure it from the confirmation candle or this one, either this eye or this eye. I'm actually not sure anymore. I have to check. So basically what we can see is that here, let me just check this one, that 37% of fair value gaps have a first step without moving any higher than this point, right? That's basically what it's saying. That's basically what it is saying. Now, and it does the same for fulfills and reversals. What I want you to take away from basically the difference that I explained here in between the first steps and the fulfills is a difference in age, right? So this means that whenever a first step occurs, it's gonna take a lot longer for the fulfill to occur or the reversal to occur. So that's one. Here we can look at another thing. Here we can say, okay, after we had that first step, how much probability do we have to move higher, right? So basically what we can see here is, okay, how long does it usually take after that first step or how long does it take to get a first step, and how long does it take after that first step to fill it? What we can see in the bottom right chart right here is, okay, if we get that first step, well, first of all, how far do we usually go before we have a first step or fulfill? And say we do get that first step, how often do we go higher than that versus how often do we just, kind of do this and then go down? So we know it takes longer, and then it's like, okay, how long, but do we actually go higher? And in this case, you can see that actually a decent amount of fair value gaps that have a first step do go higher, right? That's kind of the difference between the first step line here, because you see that here after 10% move, just almost 80%, I'm eyeballing 75, 80% of fair value gaps will have had a first step within moving 10% from the fair value gap. but only 50% will have a full fill. So that means that the other 30% moves up higher. So that means that, if this were to happen, then this is not uncommon at all. Not uncommon at all. It's also not very, it's not a super high probability. I do want to make this more actionable. I think there's ways to make it more actionable. But I want to focus more on that on the reaction page, not so much on this page. What else? What else? What else do I want to say about this? I don't think I want to say anything else about this. I think it's clear. So basically what we have done is now concluded with this feature, kind of decide, okay, how good of a support is this thing? Well, first of all, we've decided it seems more likely that this tap, this fair value gap needs to be at least tapped, right? At least tapped. I mean, it doesn't have to. We're very bullish. It could go up, but it's more probable, 60% probable here and 70% probable here to have a first step before moving up. At the same time, we know it's very improbable to have a full fill and even more improbable to close within the next 1 or even 2 weeks. So what we can basically conclude from this piece of information is that this seems more likely than continued upside. But if we do get this, then this is not likely, but this is more likely. Oh, by the way, if you have a fair value gap this big, what you see, this is very interesting statistics, right? These are things that are not immediately obvious, but I mean, I want you to think for a minute about what I just explained and what you can see in between the differences between this line. And I want to ask you, what do you think it means that you see here the full fills and reversals are more or less the same, right? It's more or less the same. On this chart on the bottom right, that shows how far from the fair value gap price usually moves from the fair value gap high in our case, to keep it simple. You can see that the full fills and the reversals more or less have the same value, right? So what does that mean? What we can derive from that? What we can derive from that is similar that, yes, it seems that quite a bit of fair value gaps do have this kind of reaction if it's big, but once we do get the full fill, a reversal is guaranteed. So then a close below here is almost guaranteed, which is interesting, right? That's basically what you can take away from that. So see, this is kind of what I'm trying to show, that there is actually, you can learn a lot from the data. So if you have a big fair, man, I actually need to write this down. We're learning a lot just from simple fair value gap and some simple data, right? So if you have this big fair value gap, we can conclude many things from price action. We can conclude that these are kind of magnets in the short term. We can conclude that they are very good support in the medium, well, still short term, but a little bit longer term, right? So this is not likely to break anytime soon. That's two. And we have also learned that it's not uncommon to see a further reaction after the first step. And we've also learned that if we do get the full fill, which will likely take longer, then a reversal is very, very almost guaranteed, right? This means that this is on the same line, means that once you get the full fill, a reversal of the fair value gap is almost guaranteed. So then you're like probably within the same day or the next candle, you will like that you fill this, you will close below this level as well. It's actually crazy. You could do a crazy weird strategy with that. Really weird strategy. You could have a breakdown short here. That would be a wild trade, but I think it might work statistically. It might work. So especially on 4 hour, interesting one. Interesting one. Taking a mental note. All right, so that's fair value gap. I hope you guys can see a little bit of the use in it. I want to say though that I understand this is a little bit more complicated. There's a lot of data. It is less easily digestible as the other features are. So if we have other features where it's very simple with the fair value gap features or the P1, P2 features, you will very simply see what's going on. And I want to create that for the fair value gap as well. So for example, what I did last week, and let me go to one of my other posts. from last week. There it is. So let me mark that fair value gap out right here. There we go. Oh no. Let me make that red. All right, so you already know my bias now, by the way, right? I personally wouldn't take any trades here. I would wait for the retrace. And if it doesn't come, whatever. But I would wait for this to be hit and then kind of look for something like that. This level would be great, this SR flip level. 73.681 would be a awesome level. But anyway, back to school, guys, because we must learn. Just because we are not at school anymore does not mean we can stop learning, is what they say. That's what hustle culture G says. All right, so we had this fair value gap. Let me take you. So now we use this as a measure of support, right? So say you would be thinking about shorting here, you probably wouldn't do it anymore. And if you think about longing, you're probably more inclined to look for longs from that low. Last week, we had a very interesting situation. What happened last week is that with P1 on Tuesday, let me quickly, I need to update my templates. So we had that, we actually had a P1 flip over there. Look at that, Tuesday. But we had this this P1 before. Let me just rewind that. So we had P1 on Monday here and P2 on Tuesday here, and we had really good statistics to go higher, right? We had really good statistics to go higher. Let's read into this one right here. All right, let me take you through it. Now that we filled that fair value, oh, wait. I think, oh yeah, there you go. This is the right one, sorry. Now that we filled that fair value gap and waiting patiently for the next day, let's review the idea of taking out the weekly high. What are the odds of that happening this week? The stats for Bitcoin is still bullish. 8.6% to take out the weekly low this week and 76% chance to take out the weekly high if the weekly low holds, right? So that P1, P2 flip we saw is an 8.1%, 8.6% event. Doesn't happen a lot. But we have new data to work with. So let's see what we can come up with. To determine the viability of the idea, so of reaching the weekly high, I want to look at the 4-hour fair value gap above us that we printed yesterday. 4-hour fair value gap, to break or not to break. In order to get to the weekly high, we most likely will need to confirm a reversal, a 4-hour close above the high of the candle that printed fair value gap. All right, sorry, that was it. What are the odds that will happen? So let me elaborate. We have this as the candle high. Let me remove this. So if you want to reach the weekly P2, you will have to close below this, right? Unless you have a 4-hour candle that does this, which is very unlikely, you need to close above that, right? So you need to close above that. Basically, what I asked myself is, okay, what are the odds of that happening this week, right? So in this case, we have a fair value gap in between the weekly high, which is our target, and the current price, right? So current price is here, fair value gap here. I mean, what am I doing? I can show you here. Current price is here, fair value gap is here, weekly high is here, target is here. So there's a fair value gap in between where we are now and where we want price to go, according to our statistics. So purely on P1, P2 based statistics, this is the weekly high is a likely target. But let's see what we got. So I selected all the fair value gaps that have a confirmation close under the previous wick. And with that, I mean close that was like this, that went further down, all right? Then I looked at how many candles it usually takes to tap, fill, reverse them. You know this about now. The end of today is 8 candles since the confirmation. So this is why I changed the current setup, that it's a little bit different, which gives us the following statistics, important parts highlighted in red. I'm just going to read it out because you know how I get them. 63.6% of 4 hour fair value gaps will have had a first step by the end of today. 49.6% of 4 hour fair value gaps will have had a full fill by the end of today. And 22.8% of 4 hour fair value gaps had a reversal 4 hour close above 72,287 by the end of today. So those odds are obviously not great for a full reversal. So then at least we know that, okay, we're probably not going to reverse this today. So, and I think this was already on Friday. We can apply the same logic by looking at the weekly time frame, which is 20 candles since the confirmation. This gives us the following. So what I meant with this is looking at the end of the week. To summarize, 78.7% of 4 hour fair value gaps will have had a first step by the end of this week. 68.7% of 4 hour fair value gaps will have had a full fill by the end of this week. And 43.7% of 4 hour fair value gaps would have had a reversal by the end of the week. And the only thing I want to say more about is if I filter on 4 hour fair value gaps that I put in on Thursday, the data becomes less favorable for tapping in. For example, 70% of fair value gaps on Thursday would have had a first step by the end of the week. While still favorable, the Thursday's 4 hour fair value gap seems a little bit magnety. But at the same time, it also means there's even less of a probability of taking that out. So while the odds are not great for a full reversal in terms of these statistics before the end of the week, at least a tap over 60% chance to happen today and almost 80% chance to happen by the end of the week seems likely. So while it's not a weird place to look for long at all, it makes sense to take the above statistics into account when determining profit-taking points and managing your trades. Paying attention at the reaction at the fair value gap would be a reasonable thing to do. And voila, what happened is history. We know that. But basically what we did is we statistically determined that it's very unlikely that you're going to close above this at least today. So it's already Friday, right? So today you're not going to close above this. Tomorrow is Saturday. So then you would need to do, I don't know, something. So tomorrow, Saturday, you're not going to close above that because Saturday does nothing. And then on Sunday, you would have to hope for this. But even that is unlikely because, by the end of Sunday, there's less than a 50% probability of reversing this. And that's reversing it, right? Not taking out that high. So if you combine that with the weekly statistics, is that we did have a high probability setup based on those weekly P1 and P2 statistics. What we saw with the fair value gap is that we basically had resistance and quantifiable resistance before that point. And what we basically did, or what I did with my analysis there, and basically quantify like how big is this resistance and how likely are we to break it before the end of the week? Because we're basically combining a couple of different things, right? Because we know that if we want to hit that weekly high, our target, we must hit it by the end of the week, because that's our whole premise. So therefore, we can ask ourselves the question, what is the probability of hitting that before the end of the week? And as you've just seen, that probability was low. So that will give you less confidence into taking that trade all the way up there. And I said it's still a reasonable place to look for longs because a tap of that fair value gap seems likely. And then, look at what happened. We had that tap of that fair value gap and we fucking melted after. Well, not melted, but still a good reaction. And only after, and this is cool as well, only after a longer time did we absolutely smash that fair value gap. So we can actually see then here, let me check that. So if I go to the 4 hour here, oh, that's the 6 hour. I don't think the 6 hour works. If I show mitigated fair value gaps, then we're probably talking about this one, the 1st of October. Is that it? 31st of October. Yes. So in the end, it got filled after not 5 hours, 184 hours. Let's look at this one. This one's wrong. I need to change that. Or did it? Oh, no, it got tapped after 5 hours, but it should be 20 hours. 184 hours. So yeah, now it's automatically calculating based on the 4 hour candle, but this is wrong. Anyway, 46 candles, 4 hour candles, it took before fully filling it, which is on 84 hours. But the reversal happened after, is that right? 32? I might need to look into this. I don't think this is right. But the reversal happened a lot later. We can actually just check on the 4 hour. Let me check where it happened. 33. Yeah, so that is kind of right. Hmm, interesting. All right. It's not 32 hours, it's 32 4 hour candles. But at this point in time, 60% of these will have had a reversal. So now you can see that the the resistance this thing gives reduces the longer it takes. And that's basically what you see here, right? The longer it, the more time passes, the less resistance it will give. So I would say that was a beautiful piece of analysis that kind of put everything together very nicely, which is something we can do now as well. And I know this is a long talk, but I'm showing it to kind of teach how I'm using it and how I think it's valuable. Now, oh yeah, I've also changed this so that it automatically selects. So if I don't select anything right here, so I deselect now, it automatically selects the last open fair value gap, right? So right now I automatically have the last open fair value gap selected, which in this case is this one. So then it's very easy for me to see, okay, um, I don't have to, well, it's just a lot less work if you don't have to manually select the fair value gaps all the time. So now I mean the most significant one is always the last one, I find. So now I immediately have the last one selected and I know what statistics for it are. So for this 4 hour fair value gap, of which I don't know, there's a bullish one. I guess it's the same as the, probably the same as the daily. Let me just that. Yeah, same as the daily. It's this one right here. So we've already said enough about that. So anyway, that's how you can use it to determine resistance. And right now we've used it to determine support. We have seen that we are bullish. Yes, we are on weekly more or less exhaustion levels. I wouldn't be surprised to see a little higher though. There is obviously a chance that we would just leave this thing behind and not tap it. Before the end of next week, that would happen 30% of the time, so not completely unthinkable. But then you have to ask yourself, is there here a long to be taken here? Anyway, no, you're not going to long this. I mean, I hope not. So you're better off just waiting for a retracement and kind of hoping for that to happen. And then if that happens, you know that it's a good long setup because of all the things we have talked about. So long story short, hi, more upside, peeps. All right, check one more thing. I don't think I'm gonna. I don't think I'm gonna mess with it. I honestly, this would probably like a great time is probably coming for longing altcoins. I look at Dogecoin again. It's going off it again. Let's go, man. Let's go. I'm all for it. Take a sip. Yeah, so this is going to be a great time for long altcoins. The where we're going now, I mean, to be quite frank with you, it doesn't really matter. You could even long trend line breaks, right? But I don't see anything on the daily, which is my preferred thing. Definitely some 4 hour ones, which are nice because that mean you could be early if the daily is still like this. Then 4 hour signs, but it's New York, so I don't think I would see anything here that I would necessarily jump into. Oh, wait, but what if? It's probably gonna look a lot more green if I put it to hybrid. Uh, wait, yeah, not that much more green, but more in the 4 hour. Some bears on the daily. I really would not pay any attention to the bears. So, especially after all the things we've just discussed, looking at bearish signals for me is like, no, very much no go. I just wouldn't do it. But here are some very nice ones on the 4 hour. I mean, if that's your thing, it's not my area of expertise, but there are some bullish signs on the 4 hour on a lot of things. So, continued upside on this 4 hour candle seems likely. Okay, one more thing I want to, yeah, because we've been an hour. I only want to say one more thing before I shut off. That is ETH Bitcoin. All right, so I see a lot of people losing their minds over ETH Bitcoin, and I mean that losing their minds in a good way, where they're saying, "Oh, finally it's taking off, it's taking off." It's like, guys, let's be hold ourselves back for a little bit. I'm an ETH holder. So I would love for this thing to take off. And I'm not saying it's not possible. I do think it's because this area I've had marked out for a while now, and it actually tapped off very nicely. So this is the area I was looking at because we had what was it? Yeah, monthly order blocks right there. And we tapped it very nicely, and now we are going up. But I mean, zoom out, right? Look at this. I mean, we've had much bigger pumps. Like this was a 26% pump here. What do we have now? 12%, so there's no reason to lose your, like everyone's already saying, oh, it's all season, ETH's finally awake. And I do think there is a very real possibility that we will see this reversal and that ETH will go up very, very fast. But it's way too early to tell, man. Like this is not a confirmation of a reversal at all. I think it will become extra clear if you have EMAs on your chart. Let me get that VWAP off. But so here, we're reaching the first daily EMA now, but look, these have not flipped since March 23, since here. So, right, so this has been acting as resistance. So you'd want to see some flipping happening. We've not been able to take a lot of highs or anything. It would be a really wild thing to do as well to kind of just like reverse from that and just never look back. I mean, what happened last time at the bottom? It's actually kind of no, it's like, yeah, you have at least some form of retest, right? There's no reason to get ahead of yourself, in my opinion. I mean, I'm already positioned, so I don't care if it takes off, like I'm ready, but I just want to stress patience. And, people will be looking at this all the way zoomed in and be like, oh, finally, we have that reversal, but it's like, bro, we are not there yet. I mean, look at this. Same goes for Sol ETH, right? Like people are like, oh, I mean, now it's kind of like going up again. So people are like, oh, it's reversing, it's reversing. It's like, bro, it's not reversing, man. Like, look at this. Like, this is not a reversal. Like, how can you think this is a reversal? It's just like up, 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 right? And there's no reason to think we will see a stark reversal yet. At least there's no signs of it yet. So I personally, I hold some Sol as well. And it's not when I see this that I'm like, oh, I'm going to put everything into ETH because we're reversing. It's like, no, we're not reversing. It's like you want to wait for some more confirmation, in my opinion. At least taking some 4 hour fair EMAs or something, because they've been acting as a great support since July, right? So until we don't, there's no reason to think it will. All right. Well, I think that's the last thing I want to say about it. I do think everything, like, I just want to finish off. I think everything looks really good. I think we're going to go into an awesome time, awesome couple of months. I still think the high will be put in for the bull run, more or less end of 2025, maybe October. So, next couple of months are going to be good. Next 10 months or so will probably be good as well. I mean, good times. We can finally look at our portfolios and smile again. And I expect this to last a little while. So, enjoy it. Let's have a good time. And let's be sure to lock in some profits later next year. All right, guys, I want to thank you for watching. If you're still around, I hope you learned something from the fair value gap feature, how to use it, and I am going to make it more actionable so that it is easier to interpret. But I'll do that in the future. For now, thanks again, man. I hope you have a great weekend, and I'll catch you on the next stream next week. Have a good one, guys.